Yo, what's good everyone? Welcome back to the Concentric Circle YouTube. It's Jake here. Today I'm going to go over how you guys could have anticipated this 1,000 point dump today and actually executed on it. So let's get into it. First thing here is what I sent out to the Discord today or last night. Basically was saying that I wanted to first of all see how Monday would play out, and that's why I didn't trade on Monday, because we had this, similarly 1,000 point dump on Friday, and I wanted to see what we would do here. Now, the reasoning for that is if we were going to continue lower on Monday and take out these draws here, I would probably expect a bullish day today and probably bullish week back up into this daily. Now, if we were going to get the opposite, which is what we got here, which I preferred actually, was slow chop longs to rebalance this leg here and then get continuation shorts back to these sell side targets that were left here. And so here you'll see I basically said that I was looking at some things underneath us, one of which being these relative equal lows here on ES. You see how ES came within a few points of these lows that were left here. Okay, so I wanted to see that get met. And where did I want to see that from? Ideally from this daily gap there. And then I said, yeah, of course, if the daily gap was left from overnight, you could take longs into it as a target. Now, here's kind of the mock-up drawing, right, which we see this has now played out. And then here's what I sent out this morning. So I sent a level for shorts 29,834, which is right here. And then once we tap that, I said long target met, which means we're ready for shorts. And you'll see this level absolutely ticked this. Now, let's get more into the delivery of how we would expect such a large move. Well, looking at the weekly delivery, right, if we go to the daily time frame, when a candle delivers efficiently, it's going to take either previous day low or previous day high, one of the two, right? That's its job. Now we see when a candle does neither of those things and trades inside the entirety of a last candle, right? The day following we can expect to be very volatile. So you'll see that Monday traded only inside of Friday's candle right here. And so we can expect that the following day, being today, Tuesday, is going to be a day with large expansion like this, okay? I can try, it doesn't happen very often, but we can look and see if we have other examples here. I mean, this is inside of this, and then we get 500 days of directional expansion. So that's one of the reasons I was expecting the volatility. And then if we scale back down, right, if we go to the weekly, actually, we can see that the week had opened here, and we had only really created a high at this point. So on the hourly, we'll see here. Weekly open is right here, and we trade higher off of that without creating any low. Now, typically, not only for the weekly, but any candle is not really going to just create no high or low and then deliver, right? An ideal efficient candle is going to, if we have a bullish candle, it's going to open, form a low first, and then flip bullish like this, like that, and then close inside. Bearish, open, make a high, move lower, make the low. So that is the logic behind why Monday's delivery was so important, right? Because the fact that we created no low here on this weekly candle and came up as the manipulation of the week to create the high, I now am expecting that distribution lower. Now, in terms of actual execution, we can scale down here and look at what you could have taken coming into the New York Open. We also see, right, guys, like the volume here as we come up to New York Open is just so dead. Price is just basically flat, ranging back and forth and building up these short-term lows for us to target. And this here allows us to also anticipate that manipulation coming into the open. So in terms of first trades you could have taken, we did have an SMT with previous day high with ES here. So with the open being right here, right, and we're expecting bearish, the first trade you could take would be an OBR entry off this order block with the rejection there and short like this. And this would be an entry that if you're basically only looking for the internal lows, or you're not expecting a manipulation like this coming into the open and you think we're just going to dump immediately. And so you'd be looking for this candle here to open, form a high, wick lower, and flip bearish, and then you enter on the flipping bearish, kind of how I just explained with the weekly candles, right? And how you want to see the high form first. So I actually did take this entry, and then once we took this low here, I closed, or it was this low here, closed and made around 1,500 on that, or a little more, it's like 85 points there. And then, right, we flip bullish here off of this, and we can use OTE to gauge what's happening. Okay, price fills in this gap right here and fills OTE and closes above, right? Pay attention to how the bodies here are closing above. We then get, straight bullish momentum up back into this daily gap here. So the level that I gave was right here, 29,834, and this was an order flow level. I'm not going to go over how I found this in the video, but you can hit me up on Discord if you want to know about that. Anyways, we tapped the level, and I sent out at the time, let me see if I still have this above. Okay, I deleted it. But I said, yeah, long target was met, and essentially it's time for shorts from there. This was, 15 points drawdown basically, right there. And then obviously we had all the sell side targets below. And then in terms of additional entries, right, we know on a day like this where we have very directional volume, you're not going to be provided as structured of entries, right? Because price is basically just having the floor falling out. And so more of what you're going to see on a day like this is a rally into consolidation, into a rally into consolidation, into a rally into consolidation. And the size of these will typically be the same. Okay, so here we have this dump, which is around the same size as this dump, which is around the same size as this dump once it leaves the consolidation, right? There, similar, right? So you're looking for an expansion in a similar size. It's kind of also similar to how we saw on Friday, right? We have expansion of 1,500 points. Today, we have expansion of the similar size there with this rebalance. So yeah, we are going to start to understand that we have that, large amounts of volume coming in once we see things like this, when we see price continuing with no sorts of retracements. So here's how you can kind of go about entering that. The first thing you can look for, which is just OBR, right, would be once we close below, this and create that CISD, look for us to come back into that first order block that was formed here. And what you're going to see is that the bodies are constantly respecting the CE of this. And so your best bet is going to be to enter either in those wicks or enter either like off this order block that got formed, and then see CE gets respected, and then we close bearish. Looking for something like that using the structure to tell you what price is doing. This would probably also be aligned with like OTE of that last leg there where we see we're not closing above the 0.79. Then once the floor starts falling out like this and we're getting no retracements, you're going to want to look for things like this where we see obvious wicks. Okay, so we have two obvious wicks to the upside, right? And then once we form like a 1 minute order block here, for example, that's where you could scale down into like the 30-second or 15-second to look for an entry. And then here, again, continuing to see wicks in this direction. And then we're closing bearish every time. So when you start to notice this and you see we're trending, and we talked about how a candle is going to open, make a high, then flip lower if it's bearish, you can start to enter in these wicks like this once you see them start to reject like this. So let's say this candle opens here, makes only a high, you know this low is going to form. You're going to get, at least break even or a win because we're flushing so much that you are able to enter in those wicks, right? And that's going to be the best way to get filled on a trade when we're on a day like this where we're just dumping. And then, okay, we come back up, rebalance. We then get this order block here, which gets tagged to the CE. Trade lower. This would be a really good place to short right here. This would probably get break even, but we respect this. Trade lower, form a new order block, wick into this, and form the high. Short off of that. There. This would come down and break even you right here. Then you'd wait, and ideally wait until we break out of this range, right, from there, because you see that we start to chop until we break out. So like here, that's okay because we're just having a rebalance. Once this chops, I would wait for the breakout, and then we're looking for the same type of entry where we form that high and wick lower. So ideally maybe entering on like this here. And this is going to be ideally once you see, like an obvious continuation of clear volume in your direction where we're trending. And then similar kind of thing here where we start to range. You avoid this, don't get chopped out, and you wait for a breakout like this. Once we break out, right, we wick back up, form a high, flip bearish. That would be a great place to enter when you see volume flushing through. And then again, same kind of thing throughout here, right? So like this, there in that wick, in that wick. And then once we get towards like weekly open and these lows that we had here drawn out, price obviously begins to slow down. You don't take anything there. Here, this would be okay where we have the soup and then we have the order block respected there, and then flip bearish, short off the closure of that candle right there to then target this last sell side target that was left, or these last two actually, like that. That would be a fair entry. Same thing with like this order block, it's tagged and tick there down. So yeah, I mean, that is how I would kind of go about trading a day like this that is pretty much flushing. And yeah, those were my expectations coming into the day. Pretty straightforward. Really, really clean day, honestly, in terms of delivery. June as well. Start of June, it's been great. I think July will continue to provide good price action. And yeah, I mean, we'll just continue printing. So if you guys have any questions on the trade, hit me up on Discord. I'll leave my username down below, as well as a link to the free server. But yeah, we'll see you in the next one. Peace out.